Welcome back to the program. My guest with me right now via Zoom, UCHENNA Minnis, is the managing partner at Howard Minnis Assets Management, while OLUMIDE Adesina is a financial market analyst at Quantum Economics. Good morning to both of you. Gentlemen, can I see you? Good morning. Hi, Uche. I can see you. How are you doing? Good morning to you. Can you hear me? Uche?
I can hear you.
Okay, you can hear me. Okay, Uche, if you can hear me, I will start with you. So much data, at least in the last few days. We've seen GDP data from the NBS. We've also seen inflation numbers from them at the MPC's decisions on Tuesday. What's your reading of all those data coming in left, right, and center?
What's my reading of what? Sorry, can you take that last part again? What's my reading?
What is your reading of all these data that we've seen in the last few days? What does it say about the Nigerian economy?
It says that we are in one of those tight places when it comes to macroeconomic conditions, clear for us. I mean, we can see the GDP numbers, and that's also going to translate crisis when it comes to our currency strength against the US dollar. So these are likely facing, and I don't think short-term fix, or we don't have that light at the end of the tunnel in terms of an immediate term response, really. And that's what we it's like a rough patch. We are in a rough patch. Yes, we can say we are, right? It should be worthy of nothing, right? The global market is generally experiencing pressure at the moment, and Nigeria is just part of that pot.
Okay, Uchenna, I think let's just quickly take a break and see if we can reconnect with you, because the network seems to be breaking in between. So what you've been saying, I've lost a bit of what you have been saying. And let's also try to connect the second guest, OLUMIDE Adesina, a financial analyst at Quantum Economics. So, Director, let's go on a break. We'll be right back. Hello, and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to the least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery.
We need to come forward and do something different, so that we move from the situation of looking at things from it's purely a consumptive approach to a productive environment.
The government and the people need to really agree on the need for a departure from business as usual.
We are now on a process of recovery. It is what I call a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy. Nnaji, it's so nice to know that you're joining us again today. All right, welcome back. UCHENNA Minnis, the managing partner at Howard Minnis Asset Management, and OLUMIDE ADESINA, financial market analyst at Quantum Economics, are still with me. Yes, but just network. Gentlemen, thank you again for joining us. If I can speak with OLUMIDE at this point, let me find out what OLUMIDE thinks about these macroeconomic data that we've been seeing in the last few days. Just like I asked UCHENNA earlier, what is your reading of these macroeconomic data?
Yeah, thanks for having me. So first of all, if you understand the fact that we are in an era where quantitative easing has stopped, and the Ukraine-Russia invasion has really distorted the market, and going on the account that inflation, global inflation, is seeming at record and seem not to be moderating, particularly in advanced markets where we see inflationary rates at 4-decade high. That really tells what is really happening around the world. So coming back home, we were not surprised when the Apex Bank increased interest rate by 150 basis points, and that was triggered by the fact that the Nigerian economy seemed to be firing up, despite contraction we saw in the energy sector. According to the numbers, by 26%, we saw the ICT really improving, and also we saw that the Nigerian economy seems to be diversifying. But having said that, I think one of the major problems the Apex Bank had to work on was the fact that they saw liquidity crunch, and that was partly because we were practically using our funds, our earnings, export earnings, to pay for fuel subsidy, and also the fact that NMPC had not been remitting to the federal account. So it provided the CBN little liquidity to interfere with the local currency. So I think wisdom was applied when they increased interest rates, and it just tells you that looking at price actions, you see that the Nigerian stock market suffered some form of moderation, and that's particularly because investors are getting more attracted to the fixed income market. But I think for listeners, I think what the Apex Bank has been able to do is that in the short term, it will really make savings kind of attractive, because 10% of the MPC reflects on savings account. That means the minimum savings account interest will go for 1.3% from 1.15. So I think interesting times, but the truth of the matter is that we are not isolated from the liquidity crunch triggered by the Federal Reserve Bank.
Okay, thank you, OLUMIDE, for that. And I'll come back to you in a bit and interrogate further some of the things you've said. But let me come over to UCHENNA. Out of all the macroeconomic data that we've seen, at least in the past few days, and with the response of the NPC, especially to the inflationary environment, out of all of them, which one do you think is biting us the most? Let me take a look at. We have GDP data, which is slow, not compared to, if you take a look at our population growth, about 2.6%. So if you just do a subtraction, it's not really there. Inflation 16.82%. Poverty rate is high. Unemployment rate is 33%. 100 million Nigerians are poor, and what have you. Interest rate now at 13%. That means that the lending rate would go high. So out of all this macroeconomic data, which do you think is biting Nigerians the most?
When you say Nigerians, then you have to look at that inflationary pressure, the inflation figures, and also as a result, by proxy, unemployment figures too. We are in that downside risk pathway, really, and as I said earlier, before we had the cutoff, there is no immediate quick fix, really, as to what we can really expect to nullify or cushion the effect of the downside risk in the market, and that's what we're currently facing. So Nigerians going into the election would face some sort of uncertain times when it comes to this macroeconomic data. I expect it to continue to worsen. The truth of the matter is, the other guest was highlighting the underlying reasons why the CBN had to sort of increase interest rate. The fact is, we're already experiencing capital outflow from our sector, currently our economy, given the fact that the Federal Reserve and all the developed markets are continually looking to tighten their monetary policy stance. And when we with what we are currently facing with our currency situation, imagine that we are now getting to experience investors pulling their capital out of the mix in this point, taking it outside to giving that growth rate differential. So that's always going to be a problem, really. And they really did not have a choice, you know, from internal factors to external factors. They had to actually increase interest rate just for us to be able to cope and curb all of these deficits that we currently face from the macroeconomic data point. And as he also mentioned, the fact that the Russian-Ukraine war is continuing to exacerbate supply shocks in the global system, with energy prices trading at ridiculous level. And that is also being translated to us in the fact that we still need to spend our foreign currencies to import this refined petroleum product. It just puts us in a very, very precarious place. And I don't think, I think this would happen for another 6 months or a year.
UCHENNA, you've just raised a very important point, which is the 2023 elections, and what came to my mind is the challenge of economic management. How do you think that we can get out of this quagmire, especially now that all eyes are on politics? Perhaps now politics is superior to the economy. How should we begin to sound into the ears of those politicians that the economy is not doing well now, in fact is worsened? From Stephen Hanke's index of misery, Nigerians are more miserable under President Buhari. It's been growing year in, year out. You take a look at the indices, Human Capital Development Index, what have you. Almost all the indices were doing badly. So what does it really say for 2023 elections as we, you know, approaching 2023?
Nancy, sometimes, I mean, I try to put things as plain as possible. I'm not a politician, don't care for it, really. But I would say things from a macroeconomic point. They don't care. That's the truth. They don't care, you know. And when you start to talk about these numbers, it sounds like you're mentioning just Greek or Italian to their ears. They are so focused on getting into this seat so that they can continually to from the activity that they're working, really. And that's what we're currently facing. And if we start to break down what is currently happening when it comes to our exchange.
Oh, okay. UCHENNA is frozen there. Olumide, if you still...
You realize that there was a lot of anti-banking.
Okay, UCHENNA, we lost you at a point, but I can hear you now. You can continue.
Yeah, so there is a lot of recklessness when it comes to spending habits of this campaign, really, you know, and the fact that when you start to really break it down, there is more increase in the foreign currency now, just because, like, there's some news coming out where delegates are supposed to be paid in hard currency. Now, when you go source for those hard currency, you exchange that with Naira. That in itself put pressure on the Naira while increasing the value of the dollars. I mean, and this is just what they do informally, you know? And when you see that, just from that informal point of view, I mean, you can explain to these people what the long-term deficits or detriments of what they're currently doing is, really. So I think before we can start to have clarity, honestly, Nancy, it has to be after the election, you know, until the people have sorted out now have who is sitting on this seat. And that's it, really, you know, for us.
Olumide, let me come back to you and taking it from where UCHENNA stopped. In fact, he categorized the politicians as these people. Do you think that Nigerians, or do you think that the economic environment right now, or even the business environment, do you see a clarity of perhaps what will happen in 2023 with the way primaries are ongoing and all of that? Is there a sense of clarity in the business and economic space as to who will become Nigeria's next leader? And if these aspirants now, as they are, if they really understand the challenges that they are going to inherit?
Yeah, thank you, Nancy. I think the problem we have is much more about fiscal responsibility. And just like a continuation of what the last speaker highlighted, if you take the case at the public trust on finances, it's at record low. Imagine a government official allegedly misappropriating funds that many states do not generate in a year. And that just tells you how the corruption plays in the system. Also, the dollarization of the economy has really weakened the naira. You know, if you understand the fact that right from the political campaigns kicked up, the naira had lost more than 20% of its value in that period. That does pretty much tell you the dollarization going on. And, you know, I think it's discriminating to find people that should be protecting the naira rather than patronizing other foreign currencies. So that's one problem. Then secondly, the fact that we produce so much raw materials and still we import refined products are major problems in the economy. So take a look at petrol, take a look at cassava and cocoa. Nigeria are major exporters. But when you look at the fact that we refine little, and you understand that economics, the laws of economics reward refined products more than raw materials, then you understand why we have so much deficit and negative balance payment. So I think cultural attitude, the fiscal responsibility has been record low. And what we are trying to see, what we want the politicians is we want accountability. Then I think the major headline is security also. The fact that our farmers that play a major sector in the Nigerian economy, taking fully account that agriculture still remains the largest employer of labor and also contributes about a quarter to the South Africa's biggest economy. One would expect that so much investment would really be put in the area of security and infrastructure. But, you know, just in the past 3 days, more than 100 farmers have lost their lives in the northwest. That pretty tells you, northwest and north, sorry, that pretty tells you the challenges that the Nigerian political leaders are having to get things right. So I think for the next leader should just focus on security, infrastructure, and education, because we are in an era of digital age, and we've seen how the digital economy is playing so much. We've seen the value young Nigerians are bringing in the market. Talks of in search of the blockchain technology, in search of payment systems. I think we should make rather more investments into that, and I think we need to start making our choices. I think the politicians have been playing a lot because if you look at the fact that we are living on borrowed times, we can't be using most of our revenues to pay for debt servicing. Recent report from World Bank suggested that we use more than 80% of our revenue to pay for debt. That is embarrassing. You know, we don't have funds to really invest in infrastructure and education. So I think we should face our choices than reform. We need to take away fuel subsidy. We also need to reduce the cost of governance, particularly in the informal side. The cost of personal assistance, the cost of allowances these guys are taking is why you can see many of these guys buying presidential form for 100 million naira without a blink, knowing fully well we're in a country where about 90 million Nigerians cannot afford $2 a day. It really speaks a lot, Nancy.
Let's dig deep into what you've just said about petrol and fuel subsidy. You know, it's really heartbreaking because we're still paying for subsidies and we are borrowing to pay for subsidy. That's the worst part of it. Nigeria's debt is at around 40 trillion naira now. That's according to DMO. Without putting CBN's ways and means, without imputing the president's, the National Assembly approval of some funds to pay for subsidy this year. What else again? If we put all of this together, Nigeria's debt profile may just be around 60 trillion naira, the way we are going. Borrowed funds, just like what you said earlier, our revenue, we are using about 97% of our revenue for debt servicing. So it's as if you have 100,000 naira revenue, you are using 97,000 naira to pay for debt. So the remaining 3,000 is what you are using to feed yourself, to do all of that. that is a sorry situation. You just said we should stop fuel subsidy. Why do you think it has really been difficult? Is it that the government is not sincere about taking that off? Is it that it's a bit political? Or is it that Nigerians are really headstrong and saying, no, leave this fuel subsidy. This is actually what we can see that the government is doing for us?
Yeah, so I think right point you highlighted. I think it's a mixture of all, because if you take a case about, you look at the Nigerian, average Nigerian budget, you notice that the CPI index will tell you that about 50% of Nigerian, an average Nigerian's budget goes on food, and energy cost is about 6 to 8%, right? If you look at advanced market, it's much higher. So that pretty tells you that who really are we subsidizing energy for? Although we understand the importance energy plays in other sectors, because it really use energy to drive in production, use energy to also move agricultural produce. But having said that, I think the major problem is that first, we have this functional refinery. So the fact that NNPC have shown little accountability at the state of our refinery, and also the fact that we have certain questionable entities benefiting from the shortfalls we are seeing, because this refined oil is brought in as many channels, at some channels. So those channels definitely are making a buck from it. Then also, I think the lack of political will, because the truth of the matter is that we need leaders that can make sacrifices, that can really stand on their guns. Though, wisdom is often said that the best time to remove fuel subsidy are when prices are a bit low. So it's doesn't really tell, and it can be done in phases, right? So the issue we are having right now is that the lack of political will is the most important part, and the fact that some powerful entities don't want these things to go, because we understand, the Nigerian Union of Workers will go on strike when there are reports for subsidy, but you can't really blame them also. The public trust is at record low. When they see what politicians really make from public finances, why would they want to be happy about the removal of subsidy? Also, I think the Nigerian public need to understand that subsidy does not favor the poor Nigerians. If you take a look at the subsidized naira, for example, it's favoring the average rich and the politicians, because most of these guys can get PTA, medical allowances, school fees allowances, to take their kids abroad, to go for health trips, to go on honeymoon. But an average Nigerian can't afford that, and these guys get the rate at 419 to the dollar. So the question is, who are we subsidizing and who are benefiting? So I think when Nigerians understand that, the removal of fuel subsidy might look very painful, but if we take the case study of Ghana, for example, Ghana really pays little or no subsidy on, and I don't think the economy is in shambles, despite the fact that we have seen inflation rate a bit higher than Nigeria. But the essence is that we need to take our choices to save, rather than start spending on things that don't really show good prospects. And also, before I drop the mic, I would like us to take a case study that, just imagine 4 trillion naira going into education. Just imagine 4 trillion naira going into infrastructure. Just imagine what 4 trillion naira can do in our other key sectors. That will really show much more upside. But I think the public needs to also take a look at the advantages of reforms, rather than just live on borrowed time, because the truth of the matter is it's not sustainable, Nancy. It's really not sustainable, and the sooner we do this, the better for us.
The question, at least most analysts and economists have said, is not sustainable. But the key question there is, how would government take that 4 trillion naira and channel it to other sectors? Will it be sincere in how it channels it? That's the thing. Now, that 4 trillion naira will not be missing in people's pockets. And at the end of the day, we'll see FCC chasing people. But I would like to bring in UCHENNA into this conversation. UCHENNA, in the scope of what we've just talked about, fuel subsidy and all of that, you've seen that even Nigeria's GDP is still powering on, as it were. At least from 2020 that we suffered the recession and we got out of it also in 2020. The nation's economy has just been, you know, slow but steady, 3.11% growth, powered by ICT, I must say, powered by the banks, financial institutions, and agri sector. What does it really say?
I mean, it just says that if we can take a time, just take a step backward and just do the right thing. I'm not even saying we should do the right thing 100% of the time. That would even be extreme to request for. Just take 30% and do the right thing, you know, starting from fixing 2 refineries, Nancy, just 2 refineries. Just 2 refineries is enough to at least cut down this excessive spending in terms of the deficit we're facing in this refinery. You know, the other speaker was highlighting why it is a lack of political will, why they can't necessarily cut down on this sort of subsidy spending. You need to understand this, Nancy. When something is your gold, your baby, you continue to spend so much to protect it, and that's what we are facing. The average Nigerian political mind is not looking at any other place to make significant amount of money where they can misappropriate, right? So it's oil and gas. So given oil and gas as the baby, they continue to spend so much to protect it at the expense of everything else. The idea of going to put money in further infrastructural build, into education, into the real sector, this just story. Those are insignificant. Those can't give you the type of money that this average politician mind want to make really on the transaction, on these transactions really. So when you look at the grand scheme of things, you will realize that we have an underlying issue, and it's the fact that we are utterly reliant on the fact that this will continue to be our bread and butter. So it's really going to take a whole lot, a radical change to turn this over, really, you know. And it can start from us, really, but what I mean by that is we're looking at saying, well, who are we looking to bring into power in terms of our governance and administration?
UCHENNA, let me stick with you a bit. The MPC's decision, was it surprising to you really on Tuesday? Because I spoke to a few people and they were like, and I even read, a lot of analysts, they say, oh, the MPC will leave rates unchanged. Was that decision surprising? And what are the direct implications of that rate hike to Nigerians?
No, it wasn't surprising for me. It wasn't surprising for me. I don't think to read or try not to be braggy here, but to read our movement in terms of our monetary policy position, I would just tell whatever the Federal Reserve is doing, would almost replicate that, you know, because of our high dependence on the USD at the moment. We have to try in our best possible way to sort of negate or nullify that effect. This, although it might be insignificant, but they believe that's the right thing to do. You know, it wasn't surprising to me. I know after the Federal Reserve just currently hiked, I'm expecting that to be the case for us in our own monetary policy stand. However, when it comes to the direct application, we already know that we'll see inflation still trend higher, right? In the short term, we might see some sort of break in trend, but when you look at the general micro conditions that we're currently facing, given the fact that now manufacturers and the real sectors will start to struggle in terms of their borrowing costs, we would probably see some of them sort of reduce their operations, given the fact that they can't pay for the higher financing costs. That also translates to unemployment, which in effect will continue to see purchasing power of the average Nigerian sort of dwindling. That in itself will have that detrimental effect. We also would see, you know, significant deterioration, given that would be seen unhealthiness when it comes to our currency exchange. We'll see that. So the average Nigerian would get hit with this increase in rate hike, because we don't run an ideal market system. That's the truth. You know, we have leakages and loopholes here and there. So what would translate conventionally in a developed market would not necessarily translate to for us. Like what would be a black and white effect say Europe and the US would be a gray effect when it comes to Nigeria, because there are other moving parts and variables that we can't really address. So I think the net position of the hike would be detrimental, would be more negative pressure when it comes to the economic and business activities, Nancy.
Okay, so that means bad days ahead, at least before it moderates in the medium term. In the short term, let's still fasten our seatbelts because it's going to get harder. That's what it means, really. But as we close, Olumide, you did also raise a point earlier, which I want to interrogate further. You talked about savings rates, of course, now being 1.3%, because savings rate is like 10% of what the MPR is. But is that enough incentives? Is there enough incentive for Nigerians to start keeping their monies in banks? What are other attractive forms of investment now? And what are other attractive outlets whereby you can put, you know, this depreciating naira?
Investor, that pretty looks very low. I understand fully well that if you look at real rates, definitely most investments in Nigeria are negative because of the high inflation. And despite the fact that Nigerian stocks, we still have some assets that have appreciable amount of dividend. But the truth of the matter is that it will really attract some form of institutional investment, particularly in the fixed income market. And that's why we saw the 5-year Eurobond yield moderating slightly. And that pretty much tells you that we saw some buying pressure. And that has been picking up in the last 2 hours. So in the near term, yes. In the long term, it's very tricky to say. I think I share equal sentiment that I don't want to be a prophet of doom, but it looks like darker days ahead, because the truth of the matter is that if you look at Q1, Nigeria was able to produce 1.4 million barrels per day rather than 1.7. So we have a shortfall of 300,000 barrels a day. And if you compute that to by 365, it means that we are losing about 4 billion. Despite the fact OPEC has given us the leverage to even increase production, we barely can't. And the major reasons are because we have seen investment in that sector trickle down by 30%. We have seen the fact that IOCs are diversifying. We've seen the likes of Shell, Exxon, more recently Total, selling off their shallow assets. And also, if you look at the fact that oil thefts still seem to be ringing headlines, one will wonder where the Nigerian economy is heading to. So for investment options, well, pretty much because of what's really happening in the market, liquidity crunch, and the fact that Nigerian stock market is relatively being far better than what we are seeing in the emerging market, gives some form of excitement. But with the fact that the Apex Bank have increased interest rates, it means that the cost of borrowing will go up. And though we might see some banks having appreciation in their stock price, because that really gives them some interest income upside. But there are concerns that that interest rate hike might also stifle borrowing. So it's a two-way thing. But I think in the longer run, I think Nigerian banks seem to be a very good bet to bet on.
Okay, Olumide, thank you for that. And Uchenna, if you're still there, I want to thank you both for joining us on today's edition of the program. It's been nice speaking to you both, at least giving some kind of perspectives and analysis into all the data we've been getting in the past few days. I'll speak to you guys soon. I've been speaking with UCHENNA Minnis, who is the managing partner of Howard Minnis Asset Management Ltd, and Olumide Adesina, who is a financial market analyst at Quantum Economics. That's the show today, so it's a wrap. But don't say that today's show was just about doom, doom, doom. No, there's still a silver lining. I'll see you all again tomorrow, God willing. Be the best you can be and be the change that you want to see. Bye now.